Yes, so welcome to the second part of our support and resistance lecture. So here we are now on the chart looking at GBP USD, which is the British pound and the US dollar. So we're on the 2 hours time frame. Looking at this, you can see the trend that we are in the market. Probably you can try to change, just like in the previous lecture, where I told us we can use the line chart to determine the trend. Can go to the line chart. So from here, I can easily see that we're bullish here. Then here, I can see that we're in a ranging market. We're ranging around here. Then from here, I can see that um, some bearishness is brewing up. So um, that's just to identify the trend, the market trends. So let's quickly now go back to taking this off. Let's go back to our candlestick and look at our zones of support and our zones of resistance. Clearly, you already see this zone. Why did I pick this zone? Because I can see already see multiple touches and rejections from here. This is the first touch here, the first low. Then when we came here, we went up, we bought a little. When we sold back, which is a form of retracement, we can see that we had another rejection. We bought a bit again. When we came back again, we bought. So this clearly, after these two touches now, I can already see that okay, the market is trying to reverse because initially we have been in a downtrend, we've been selling. So if you look at this now, we had this high, we had this low, we had this lower low again now. But instead of creating a lower high, we created high high, which means we kind of switch from selling to buying. And then I can also see some rejection from this support zone. So this is telling me that the market is ready for some buys to make a reversal from the bearish trend to a bullish trend. So after seeing these two touches now, I can now confidently place my buy here, my stop loss at the last low, then probably target 1 to 4, 1 to 5 RR is enough for me. So this is 1 to 6. You can see. So this is how we can trade within these zones of resistance and support. So this one is for the support. Let's look at let's take a quick one at horizontal resistance. Even though this is not selling that much, but we can see that the market was making some rejections from here. So we had the first rejection, we had the first touch here, the first rejection, second rejection. So if you take a sell to this particular low now, we're already making money. So it is as simple as this. So that is why at Ahmed we are trying to simplify analyzing the market and trading. So from here to here now, already make about 1 to 2 RR. So this is we had another rejection from here. If I take another trade from here and I target this low again, because initially I targeted this low for this first trade. So if I look at this now, place my entry here, my stop loss, is always going to be at the end of that zone. So, and I target this particular, and can even target this last low. I'll still do what? I'll still make money. This is about 1 to 3 risks to reward. RR. So that is just for horizontal resistance and then horizontal support. So we can also have trend line resistance and trend line support. Yes, if you look at this example right here, we draw our trend line. We said we must have about 2 to 3 touches. From here now, I draw this. Probably it was these two first. What we'll now do is we extend that trend line, hoping that whenever we are going to have another touch of this, we take a buy. So probably at first we had this, the market bought, we were not in this trade. The market kind of retraced back here, it bought again. So while it's buying, I'm already anticipating that whenever it makes a retracement, I want to enter another buy. So whenever it touches here, I must take my entry from here and take a buy. So I place my entry on this particular um, point, then my stop loss probably 20 pips or thereabout. I target a low that is next to this particular point. Then I can target the high as my take profit position. So this is also about 1 to 3 hour. So this is using the trend line support for buying. You can buy from here, you can buy from here. So that's not to say it's going to hold forever. We can see that we had a breakout. Whenever we had a breakout now, this trend line that was serving as a support before is going to change to what? A resistance. So that is just how we analyze the market using the S and R levels. So for the resistance, as for the support, we can see this particular zone now. We were selling from here. You can see these three zones. We treat it as zones, not as lines, just like I said earlier. So you can have something like a double line like this. So to give you the opportunity to be able to enter and not miss the trades. So I can take a sell from here, take a sell from here, and take a sell from here. So targeting this low, because we are going to, in a selling market or in a downtrend, we are going to be creating lower lows. So I'm very sure that we are going to be breaking this low. We'll break this low. So I'll be targeting the lows, just like I've been targeting the highs for buys here. So that is just how to take a sell using the support and resistance level. Take a sell, use this high as my stop loss and this low as my take profit. This is a very quick 1 to 6 RR trade. So you can do the same here and the same here. So we'll make sure that we are able to connect 2 to 3 points before we are going to say, okay, we have a valid horizontal support or a valid horizontal resistance, and at the same time we must see 2 to 3 touches before we are going to say we have a valid trend line support or a trend line resistance. But we must note, initially we are always being told that the more the touches, the stronger it becomes. But nowadays, I need to tell us that the more the touches, the weaker it becomes, especially after 3 to 4 touches. Whenever you have this particular zone now, we had 1, 2, 3, 4 touches. Whenever you have 4 touches, just leave that zone and don't trade from that zone again, because now the market makers are going to target it because they already knew that they are having a lot of sellers from here. So it's just that simple. So after the 4 touches, you can just leave the zone and wait to see what the market will do. And if we look at this here now, we can see how the market broke through this zone. And you can see they still sold back. But the reason why they sponsored this buying was just to take out the money of these people, of those that are trying to sell from here. So after 3 to 4 touches, we should try to avoid selling from there or buying from the support. So from here now, we had 1, 2, 3 touches. Yes, the fourth one might work. I might decide that, okay, I can still take another buy from this zone. But after the fourth touch, I'm going to avoid buying from there. I'm going to wait. Probably the market is going to give me a reaction. Then I can probably now enter later on. But I don't want to leave my money at the mercy of the market makers. The same thing applies to our trend line support and resistance. We can see here after the third touch, what happened? It got broken and we sold off. So, and I need to tell us and inform us as young, inexperienced traders to stick to analyzing the higher time frames, especially when we are looking at looking for strong resistance and strong support. If you go to the 5 minutes and you're seeing we have a touch here, we have another touch here, this is strong, it might be very weak. In fact, they are always very weak. So the best way to trade is to analyze on the 30 minutes the 1 hour, the 2 hour, and the 4 hour chart for now, until we fully have a grasp of how the market is moving. So let's quickly and cleanly analyze what we're expecting to do here. If we look at this chart now, we see this particular high, this low, but instead of creating a lower low, we created, a lower high, we created an higher high, which means we switched from bearishness to bullishness. We've broken this particular structure now. So what I'm to look for in a bullish market is a buy, and it's as simple as that. So where do you think I can buy from? I can see a point here, and I can see another point here, which means this is a zone that we have been buying from. So I will just mark this zone now as a zone where I can take my buy from, and we just add 2 touches. So I can be waiting for the market to come to this zone and take a buy. So all I need to do is set my buy limit here, set my stop loss below this low, and the next target I'm going to have is this high, because I know we are already in a bullish market. We are going to create a new higher high for a bullish market, but I'm not sure where that high is going to be at, but I know we are going to break this particular high that we had here. So it is as simple as that. So that is how we analyze the market using the S and R level, which is one of the most important aspects of price action trading. So we need to know how to identify these zones, how to mark these zones, and how to trade these zones, just like it has been explained in this video. So I'll be waiting for you in the next lecture to look at the other aspects of technical analysis. So if you're having difficulty understanding some aspects of this video, we can as well go back to the previous ones so that we can take our time to study them, and at the same time we can ask questions from our mentors. Thank you, and see you in the next lecture.